Welcome back. If you're tuning in, you want to get past the headlines and really understand the big issues quickly and clearly.
And today, we're tackling a big one. The incredible surge in gold prices. It's something everyone's talking about.
Definitely. We've sifted through the news, the analysis, the expert commentary.
Yep, pulled it all together.
Our mission for this deep dive, simple. We want to break down why gold is climbing so fast, what's really driving it, and crucially, what does this mean for India, for the market here, and for you, the retail investor?
And we'll keep it straightforward, easy to follow language, no jargon overload.
Exactly. So let's start with that headline figure. Gold crossing 1 lakh per 10 grams in India. That's huge.
It is. And it reflects what's happening globally. We saw gold hit all-time highs, getting close to $3,400 an ounce on COMEX.
Wow.
And here in India, even before things like making charges and GST, prices were up over, 96,850 per 10 grams.
The gains are just staggering. What are the numbers? Like 29% this year.
Yeah, 29% just this year and 45% over the last 12 months. It's been a very sharp rise.
Okay, so let's unpack the global picture. What are the main engines behind this surge?
Well, there are several key drivers working together. First off, you've got a lot of geopolitical uncertainty floating around.
Right, the usual suspects.
Pretty much. U.S.-China trade tensions are still simmering. The war in Ukraine continues. Instability in the Middle East.
Yeah.
All this makes investors nervous.
And when investors get nervous, they look for safety.
Exactly. Gold has always been that classic safe haven asset. Remember when gold futures spiked briefly last year? Around $3,510 an ounce, I think it was, back in April 2025.
Yeah, I recall that. Shows how sensitive it is to global tensions.
Definitely underscores that safe haven buying.
So global jitters are pushing people towards gold? What else?
Another massive factor is central bank buying. This has really ramped up, especially from China, since the sanctions on Russia back in 2022.
How much are we talking?
It's significant. Yeah. If you look at the London OTC market, which is where a lot of this institutional trading happens, monthly demand jumped from maybe 17 tons to over 100 tons, like 108 tons.
That's a huge jump. So they're just soaking up supply.
Precisely. When major players like central banks buy that much gold, it tightens the available supply in the market. Simple economics, right? Less supply, prices tend to rise. Plus, it sends a signal.
A signal of confidence.
Yeah, long-term confidence in gold value. Interestingly, though, our own RBI, the Reserve Bank of India, seems to have slowed its buying pace recently.
Okay. We'll come back to India specifically. What about monetary policy? Interest rates and all that?
That's definitely playing a role, too. There's been this anticipation, especially looking into 2025, that the U.S. Federal Reserve might start cutting interest rates.
And lower rates make gold more attractive. How does that work?
Well, it lowers the opportunity cost of holding gold. Gold doesn't pay interest, right? So if you can get, say, 5% interest safely in bonds or the bank, holding gold means you're losing that 5%.
Okay, makes sense.
But if interest rates fall, maybe you're only getting 2 or 3%, then the cost of holding gold feels lower. It becomes relatively more appealing.
Got it. And you mentioned stagflation concerns.
Yes, that's another angle.
Yeah.
If the economy is sluggish, but prices are still rising, that stagflation gold often looks good as a hedge against that inflation eating away at your savings.
Right, protecting purchasing power. What about the dollar? I always hear gold and the dollar are linked.
They usually have an inverse relationship, yeah.
Yeah?
Gold is priced globally in U.S. dollars. So when the dollar weakens against other currencies,
Like the rupee.
or the euro or yen, it makes gold cheaper for buyers using those currencies.
So a weaker dollar actually fuels demand from outside the U.S.
Exactly. It boosts demand. Some estimates suggest that currency movements account for maybe 20%, even 30% of the recent price moves in gold. We've seen the dollar index trading at 3-year lows recently.
So that's another significant factor. Anything else on the global front?
Yeah.
ETFs.
Oh, yeah. Exchange-traded funds. We've seen record money flowing into global gold ETFs through 2024 and into 2025.
Retail investors getting involved too.
Both retail and institutional investors.
Yeah.
China, for example, saw a huge inflow, something like $1 billion, into its gold ETFs early in 2025. It just shows broad bullish sentiment.
So it really is a cocktail of factors. Instability, central banks buying big, rate cut expectations, a weaker dollar, strong ETF inflows. Wow.
It's kind of a perfect storm, really.
Are governments trying to, control the price?
Generally, no. Not direct price controls on gold. They tend to rely more on broader monetary policy tools, like interest rates, which indirectly affect gold's appeal.
But they're watching it.
Oh, absolutely.
Okay.
Authorities are keeping a close eye on the futures markets,
Yeah.
especially to make sure excessive speculation isn't driving things too wildly.
And what are the big banks or analysts forecasting? Any predictions?
Well, you always take forecasts with a pinch of salt, but yeah. Goldman Sachs was looking at maybe $3,100 to $3,300 an ounce by the end of 2025. And Ed Yardeni, he suggested even higher numbers, potentially $4,000, even $5,000 an ounce, if these geopolitical risks keep boiling up.
$5,000. That's ambitious. Okay, let's simplify this. For someone listening, trying to get their head around why prices are up so much here in India, what are the absolute core reasons?
Okay, let's boil it down. Reason one, big global uncertainty. Wars, trade issues, stuff like that makes people want safety, and gold equals safety in many minds.
Safe harbor. Got it.
Reason two, the US dollar. When it gets weaker compared to the rupee, it technically makes dollar-priced gold cheaper for Indian buyers initially, which can then boost demand and push up the rupee price.
Right, that inverse relationship.
Reason three, interest rate expectations. When returns on safe things like bank deposits look low, holding gold seems like a better option because you're not missing out on much interest.
Less opportunity cost. Yep.
Reason four, big players, especially central banks, are buying lots of gold. Less available gold means higher prices if demand stays strong. Basic supply and demand.
Taking supply off the table.
And reason five, inflation worries. When people worry about prices going up for everything else, they often buy gold, hoping it'll hold its value better than cash.
Okay, so uncertainty, dollar weakness, low rate expectations, central bank buying, and inflation fears. That's the core recipe.
That's pretty much it, yeah.
Now let's zoom in on India. How is this playing out specifically here? We know prices are up. You mentioned 23% domestically this year, hitting over 93,000 per 10 grams.
That's right. And the impact here is quite unique because gold isn't just an investment in India, is it?
Not at all. It's deeply cultural. Jewelry, weddings, festivals, gifting. It's woven into the fabric of life for so many.
Exactly. So these price hikes feel very personal, affecting family budgets and traditions directly.
How are people reacting? Is buying behavior changing?
We're definitely seeing shifts. Making new jewelry purchases has become really expensive. People are still buying for essential things like weddings, but maybe less volume or lighter pieces.
So discretionary buying is down?
Sharply down, yes. The casual purchase, the small celebratory item, that's fallen off quite a bit.
What about old gold?
That's the other big trend. Exchanging old gold for new purchases is way up. It accounts for like 40 to 45% of transactions now. People are using the gold they already have to offset the high cost of new items.
Recycling their assets, basically. Makes sense. Now, you mentioned a contrast between global investors and Indian investors earlier. Can you elaborate on that?
Yeah, this is quite interesting. Globally, we see huge inflows into gold. ETFs, investors are buying gold as a safe haven, right?
Right.
But in India, the trend seems to be the opposite. We're actually seeing net outflows from gold ETFs here.
So Indian investors are selling, or at least not buying ETFs.
It looks like many are booking profits. They see these high prices as potentially a good time to sell the gold investments they hold rather than add more. It suggests a different risk assessment maybe, or different expectations.
Fascinating difference. And the RBI, India's central bank, you said they slayed down buying?
Yes. After being quite an aggressive buyer for a while, boosting reserves, they've noticeably eased off the pedal in recent months. It suggests even they might view current prices as quite high and are perhaps waiting for a better entry point, or just being cautious.
So even the official stance is cautious at these levels. Okay, pulling this all together for our listeners, the retail investors in India, what are the key takeaways? How should they navigate this?
Okay, first, just understand why prices are up. It's that mix. Global uncertainty, the dollar-rupee dynamic, rate expectations, central bank actions, inflation fears. It's complex.
Not just one simple cause.
Definitely not. Second, recognize that yes, buying new gold, especially jewelry, is very expensive right now. Factor that into any plans.
Budgets need adjusting.
Absolutely. Third, if you do own gold already, these high prices might present an opportunity. Selling or exchanging could be favorable, as many are already doing.
An opportunity for existing holders.
Fourth, be aware of that divergence in investment behavior. Global money flowing into gold ETFs, Indian money seemingly flowing out. It highlights different perspectives on whether this rally continues.
Different strategies at play.
And finally, and this is the most important bit, really think about your own situation. What's your financial goal? What's your risk tolerance? Don't just jump in because prices are rising.
Past performance isn't a guarantee.
Exactly. Past performance is not indicative of future results. Gold can be a part of a portfolio, maybe as a hedge, but diversification is usually the smarter long-term play. Don't put all your eggs in one basket.
Sound advice. Always important to remember diversification. Okay, so to recap, gold's surge is complex, driven by global forces. In India, it's making new purchases pricey, boosting exchanges, and leading to cautious behavior from investors and the RBI, contrasting somewhat with global trends.
That sums it up well,
Mm-hmm.
which leads us to maybe a final thought for listeners to ponder.
Go ahead.
Given everything we've discussed, the global picture, the Indian context, the price levels,
Yeah.
what role do you think gold should realistically play in your own long-term financial plan?
That's the key question, isn't it? Something for everyone to consider carefully based on their own circumstances. Thank you for breaking all that down for us.
My pleasure.
And thank you for joining us for this deep dive into the gold rush. We hope this helped clarify the forces at play and what it might mean for you.